And Karan Mittal, analyst from ICICI Direct, joins us on the line. Karan, I'm sure you are witnessing how some of the large cap stocks in autos like Tata Motors and Maruti have actually been reacting. I want your view on Maruti first. The management says they are targeting 50% market share in the domestic space with the help of these kind of new launches like Ertiga, which has seen good response of 10,000 bookings in first 5 days. At current levels, how do you view the stock?
Good morning. See, Maruti, the volumes have been good, especially in the last month in March, but then we're expecting some kind of a dip going ahead because a lot of pre-buying would have happened in the month of March. However, having said that, a lot of new model launches have happened and Ertiga has seen a good this thing, and we're expecting about almost about 20% volume jump in this month. This financial year, that's FY13. So we'll revisit our estimates. Currently, our target price was at 1275, which is a hold as of now. But I'm sure we'll revisit our target price after the quarterly results.
And what about Tata Motors? Because you're looking at the latest numbers coming from JLR. One section of the analysts have not even waited for the Q4 numbers to come out and have already started earnings estimates have been revised upwards to around 40 upwards. So at that price, at 307, do you see further upside too, and how have you worked your numbers?
See, absolutely, the numbers for Tata Motors, especially JLR, has been very good. It's been for the last 4 months, the numbers have been increasing very rapidly, and this was an all-time high of about 36,000 vehicles sold. So yes, it does look very good. Currently, our target price is at 316, which makes it a whole in terms of our rating metrics. But we are very confident of a very good performance from JLR. So we'll again revise our estimates for Tata Motors. We would continue to hold it as buy, rate it as buy.
Even buy at 300 plus?
Yes, it looks good.
Okay, that's Tata Motors, and that's clearly the story that's played out so far. What would be your expectation post the rate cut announcement on how you would want to, break up your focus between the three segments, either UV, commercial vehicle segment, or passenger vehicles and two-wheelers?
See, the rate cut was always on the cards, but yes, the magnitude has been a little higher than expected. But we feel that it might take some bit of time for the rate cuts to actually pass on to the consumers. Having said that, we are building about 11 to 13% in terms of in lines with SIAM estimates for car sales hike, whereas Maruti being the market leader and suffering a loss in the last fiscal, we are expecting about a 20% jump for them. But the MHCV space would be slightly on the lower side, say about 4 to 5% growth is what we are expecting. Tata Motors and M&M would continue to benefit from LCV space, which is again growing much fast ahead on the MHCV side. And if you talk of the UV side, we are slightly cautious on the same, primarily for the reason of the diesel might get deregulated this fiscal, or there might be some additional burden in terms of the increased excise duty which has happened in the budget.
Right.
What about Hero MotoCorp and Bajaj Auto? I mean, the two-wheeler sales have been not that impressive over the last 2 to 3 months, but with rate cuts announcement coming in yesterday, the direct impact or the more visible impact comes in for two-wheelers given the ticket size there. Is there a sense that, over the next 6 to 8 months we would see a revision?
Absolutely. I beg to differ on that because two-wheelers especially are not really linked to the interest rate cycles because a lot of sales do happen directly on a cash down basis. And the last month sales were not very impressive. Bajaj Auto was one, could be a beneficiary given that a couple of new models are expected to launch in April, May, which is a Pulsar 200 and Duke bike. Probably a lot of sales could have got deferred because of that. Hero Honda, the numbers were good, but then, as in Hero MotoCorp, the numbers were good. But then if you actually look at HSMI, they've been doing very well and now almost overtaken Bajaj. So we are slightly negative on the two-wheeler space amongst the listed entities, and also Hero MotoCorp looks a little too expensive at these levels.
Karan, what do you make of Mahindra and Mahindra? That particular stock has been slightly on the underperforming side compared to some of its larger peers. And after Ertiga launch, there's one opinion which is coming to the fore that some of the Xylo volumes may be hit because of Ertiga, apart from Innova. However, that is unlisted. So if that actually happens, then how do you see M&M stock compared to its peers going forward?
See, M&M, the UV space has been doing very good. I don't see a lot of impact happening from the Maruti stable, because a lot of sales come in from the diesel variant for M&M, and but then yes, slight negative for M&M is the falling FES sales as the farm equipment, and that seems to be too much of a concern, because for about 3 months the sales have been falling on a continual basis, and if the sales continue to fall for the FES space, we could see some downside in the stock. But the UV space seems to be, they seem to be more or less comfortable over there, and the XUV 500 doing pretty good for them. They've again, I think, closed down the bookings for the same. So the UV space looks comfortable for them.